Been an up and down week for the Australian consumer data flow locally in Australia. We kicked off the week with October retail sales showing a 0.6% gain in the month, which is a little bit better than expected. That was followed by the GDP detail for the September quarter, which showed a donut for consumption spending in the quarter. Not a good one either, flat all up, implying that all of that tax cut essentially was saved in the quarter. The news got a little bit better into the end of the week with our Westpac Card Tracker, Westpac DataX Card Tracker report. This captured card activity up to November 30, so the first few days of the Black Friday sales, and the news is more positive. Compared to last year, discretionary goods activity is up 10.5%. That's a very strong gain. The same figure for last year was up just 0.5%. It's fairly broad based across the discretionary goods categories as well. Electrical items, clothing, and online sales all going pretty strongly. So at last, some positive signs that those tax cuts are starting to flow. It looks like consumers were holding back until the discount windows came through, and there has been a positive start. There are a couple of caveats to this. Last year and the year prior, we saw consumers heavily target these discounted sales windows with activity dropping off very sharply outside of these events. So we'll need to track how things perform outside of the Black Friday window. We'll get another update in a couple of weeks, which will have the Cyber Week numbers, plus that sort of lull that happens just before the final push to Christmas and Boxing Day sales. The other caveat here is that outside of the discretionary goods space, discretionary services spend has softened somewhat over the last few weeks, and the overall pulse in terms of quarterly growth momentum in the card activity has actually faded a little bit. So it will be quite important to see how that discretionary goods picture follows through into year end. But barring quite a severe drop off, it does look like the December quarter won't be seeing a donut. In fact, if we look at 10.5% growth in nominal terms in discretionary goods, about 2.5% was likely to be inflation. Another 2% and a bit will be population growth. Per capita spend, real per capita spending on discretionary goods looks to be up about 5%, which is pretty strong, all things considered. So discretionary goods, recall that it covers about 30% of total card activity, and so it is important what happens outside of that space. But certainly with this improvement from late November, is looking a little bit more promising into the fourth quarter, and it's a nice to see given that more disappointing data for the September quarter.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published, or reproduced in whole or in part without the prior written permission of Westpac.